Billionaire Andrew Carnegie famously said that 90% of all millionaires make their fortune through owning real estate, and that more money has been made in real estate than in all other industrial investments combined. Real estate is a fantastic investment because of all the many income streams it provides. A good real estate investment will provide you cash flow, all while your mortgage is being paid off. Your asset will also appreciate in value over time and provide many tax advantages. But on the flip side, being a landlord can also be a terrible experience for some people. You can rent out your property out to tenants that trash the place, break things that you didn't even know could be broken, and can be really needy, pestering you for every little thing that happens at your property. Real estate is a great investment, and every savvy investor should have some real estate in their portfolio. But sometimes it doesn't make sense to be a landlord. Maybe you don't want to deal with all the pitfalls of being a landlord, or maybe you already have a really demanding career, and you don't have the time to learn all about what it makes to make really good real estate investments, or tour properties, or source off-market deals. Or maybe you just don't have the means to buy a house at the moment. Between inflation, rising interest rates, and insane house prices, it's getting increasingly difficult for people to even get a single property. So if you want to enjoy some of the benefits that come from investing in real estate, but don't want to deal with the hassles of being a landlord or aren't able to buy a home yet, then lucky for you, I have 3 ways you can start investing in real estate today without buying a home. The first way is investing into REITs. This is the most common way of investing into real estate without buying a physical property. REIT stands for Real Estate Investment Trust, which are public companies that own, operate, and finance income-producing properties. REITs can invest in residential real estate like single-family homes and apartment complexes, as well as most real estate property types, including cell towers, data centers, hotels, medical facilities, offices, retail centers, and warehouses. That was a lot. Because REITs are mostly public companies, they are actually stocks that you can buy on a stock brokerage platform. For example, you can use my link below to get 5 free stocks from Webull, where you'll be able to purchase popular REITs, such as Invitation Homes, a REIT that owns over 80,000 high-quality single-family rentals in 16 markets across the country. Seriously though, Webull really does give you 5 free stocks for only depositing 1 cent into your account. And when I did it, I got $28 worth of stocks for free. So it really is worth it to just get the free stocks, even if you don't plan on buying any REITs just yet. Overall, I would say there's 3 main benefits of investing in REITs. The first benefit is that REITs generate a steady income stream for investors. This is because in order for a company to qualify as a REIT, they're required to pay a minimum of 90% of their taxable income in the form of dividends to shareholders every year. The second great perk of investing in REITs is that they're highly liquid. This is because, like I said before, REITs are stocks that are traded on the public market, meaning you can buy and sell them whenever you want. This is a massive advantage REITs have over physical real estate investments, because obviously with physical real estate, you can't just decide one day to sell your investment, since the actual process of selling a house is time-consuming and costly. The last main benefit of investing in REITs is portfolio diversification. REITs typically have a low correlation with other stocks and bonds, so if you're a stock guy, you should probably diversify your portfolio with some REITs, rather than investing your life savings into a stock like AMC and banking on that to pay for all of your life expenses. The second way of investing into real estate without buying a home is one I know you're really going to like. It's crowdfunding. What real estate crowdfunding platforms do is they raise money from thousands of investors like you and me and pool that money together to buy real estate like apartment complexes, single-family homes, office buildings, retail centers, and more. Traditionally, these private real estate funds have only been available for investment purposes to accredited investors that have high incomes and net worths in the millions of dollars. But in the last decade or so, there have been so many real estate crowdfunding companies popping up, and their business model allows your average Joe who isn't affluent to invest with them, which has opened up private real estate investments to the general public. There are several well-known real estate crowdfunding platforms out there on the market today, and I want to take a deeper dive into one of them so that you can get a better idea of what to expect when investing into one of these platforms. The most well-known real estate crowdfunding platform is Fundrise. Fundrise is kind of similar to how Robinhood is to stock investors. It has a really easy user interface and simplifies everything so that the platform is easier to use for non-investor savvy people. You just simply answer a few questions about your risk tolerance and investment objectives, and Fundrise will assign you a customized real estate portfolio. And you can even go in and see the individual projects you're invested in, which is pretty cool. With Fundrise, you can invest as little as $10, which is really good because most crowdfunding sites have a minimum of a few $1,000s. And so far, over 300,000 individual investors have invested more than $1 billion with them. Right now, they have 255 active projects, $2.8 billion worth of real estate under management, and invest into apartments, commercial, and single-family real estate. I also really like how transparent this company is. They show their annual investment returns for the past few years and compare them side by side with the returns of public REITs and the stock market. You can see that Fundrise has had a positive return in the first quarter of this year, whereas if you were to have invested in public REITs or the S&P 500, you would have lost money since stocks have performed pretty badly so far this year. So investing in private real estate through crowdfunding platforms like Fundrise can be a great option for diversifying your investments. But as of right now, I've only mentioned positive things about real estate crowdfunding platforms, and it probably seems like I'm sponsored by Fundrise, but I promise I'm not. There are also some cons to real estate crowdfunding. One con is that they have higher fees in comparison to real estate investments on the public market. Most of them charge around 1% in advisory and asset management fees, which means that you would pay $100 in fees for every $10,000 you have invested, which is pretty high, but also standard for private real estate investments. The other big con of real estate crowdfunding or private real estate investments is the lack of liquidity. You see, with public real estate investments like REITs, you can sell your position at any time and get your money back. But with real estate crowdfunding, your money is for the most part locked up for a few years. For example, on Fundrise's website, it says, "While Fundrise should be viewed as a long-term investment, we understand that investors may want or need to prematurely liquidate or redeem their shares. Accordingly, our investors may request to redeem their shares at any time, although such redemption cannot be guaranteed, especially in times of economic uncertainty, and there may be costs associated with premature redemption." So if you invest into private real estate from a real estate crowdfunding platform, don't expect to be able to withdraw your investment when you want to, because it's not guaranteed. And if you are able to withdraw, you'll likely have to pay some kind of penalty. The third way of investing into real estate without buying a home is by investing into real estate index funds. An index fund is essentially a basket that contains many investments. So when you invest into an index fund, you are investing into the potentially hundreds or thousands of investments that the fund holds. A real estate index fund is a fund that invests into many public REITs. An example of a great real estate index fund is VGSLX, or Vanguard's Real Estate Index Fund. This fund invests in real estate investment trusts that buy office buildings, hotels, and other real estate property. Currently, this index fund holds 164 real estate companies, including the likes of Public Storage and Simon Property Group. So if you make a single investment into this fund, you would actually be investing into 164 individual real estate companies. All good index fund providers will give you a breakdown of exactly what companies it invests in and how that is broken up between different sectors, so that you can know exactly where your money is going. This particular fund has returned an average of 8.92% annually over the last 10 years, meaning a $10,000 investment into this index fund 10 years ago would now be worth $23,500. One advantage real estate index funds have over private real estate investments, which is the investment I covered before this one, is their low fee structure. For example, Fundrise charges fees that total to 1% of your investment amount, which means that you would pay $100 for every $10,000 you have invested with Fundrise. Whereas VGSLX has a much lower expense ratio at 0.12%, so you'd only pay $12 annually for every $10,000 invested. Most real estate index funds have a minimum investment of a few $1,000s. VGSLX has a minimum investment of $3,000. However, many of the larger, more popular index funds have an ETF equivalent, which have no investment minimum. For example, VGSLX has an equivalent ETF called VNQ. And without getting too much into the weeds of what an ETF is, just know that if you invest into an ETF equivalent of an index fund, you'll be investing into the exact same thing basically. Overall, real estate index funds are a really simple and easy way to get investment exposure to hundreds of different high-quality REITs. So think of this as the diversified option of the first investment I talked about. Instead of just picking one or a few different REITs, you're picking hundreds by picking just one fund. Of course, there are many other real estate investing options out there that I didn't cover in today's video, but these 3 ways to start investing into real estate without buying a home are the ones that I consider some of the best and easiest ways to really get into this space without having to actually own any physical real estate. But that's all for today's video, guys. I hope you found it helpful. I tried to really focus on things that you could go out and do today if you wanted to, so let me know down in the comments below if you did enjoy, and make sure you leave a like down below as well. It really does help out. But I'll see you in the next one. Take care.